Hello, let's go over the updated gamma exposure tool on George. So first and foremost, let's make this full screen so you can see it. And I'll zoom in a little bit so you can get a better clarity on how this actually works. The market is closed right now, but I want to show you kind of the events from today, and we can also do a little bit of a recap from where we ended up. So this morning, this page was saying short all the pops, and that's effectively what we got. If I look at my trading view right now, it has been saying short the pops, and we were able to short the pops effectively basically all day. We kind of called it in the pre-market. And then at the market open, we called the reversal here, and we ended up going down because of the confluence tool that we were using for George. So at the top here, you'll see relatively real-time updates. If it doesn't update, sometimes it takes a while. Like this was last updated 5 hours ago. That's not because of a miss on our side. It's because either the data is coming in slow or market makers have not fully repositioned themselves. So this gets updated whenever we get the data in. So that's the first thing I want to call out. The second is on the top here, you'll see the path change dramatically throughout the trading day. So I'll show you an example of like how I was using it through the day. And hopefully you can use that as a tool for confluence as you trade. So let me go through our SPX chat. At 9:13, there was this short the pops environment. We had 64.75 exposed. We never got there, obviously, but it was something that George was saying, and we had $25 billion towards the downside there. And even yesterday, I was mentioning that we had a lot more exposure towards the downside, which was $5.5 billion, and the 65.80 strike was really the thing that was lit. And if I go back to the George tool and then also the charts, 65.80 was swept multiple times here, right? So like we got a sweep here, those end up going in the money. And then we ended up getting a reversal out of that. So that was the correct call for George. That 65.80 was the pin. Pin just means you sweep that once on the downside, maybe once on the upside, but that's where you will be looking for a reversal, right? That's what that 65.80 was. So this is how that's been working, and it's been working pretty well, right? So $5.5 billion towards puts, $1.3 billion towards calls. Honestly, both of them worked. 65.75. If I look at the chart, like we ended up bouncing exactly from that zone, right? So again, this is a tool of confluence. And we had got the read on this yesterday, like literally at 5 p.m. I said this, like we have a lot more, bearish bias tomorrow and for Friday compared to the bullish bias that we had. So that's how I was able to see that. And then we got the short the pop confirmation right before market open at 9:13. And we just had to wait for the reversal and figure out where that was going to land us, right? So this is how that's been working on the SPX side. And so now it's saying by the dips, but again, we have 7,000 call wall. It's been there for like weeks at this point in time. Doesn't mean we hit it. You have to use some rationale there as well on how you want to observe and what the right move might be for the day, because 7,000 is pretty far from the money. I don't think we got that today unless we got some world peace, but it is what it is. If you scroll down a little bit, you'll consider the analysis here, like mean reversion towards some expected point, about the dips towards this, or the dealers are controlling the tape. And you'll get a sense of like the acceleration, right? The acceleration here is going to be either upside or downside, and how fast it's going to move. So anything that's higher here, for example, acceleration of plus 21, that means the speed towards that direction will be really fast compared to plus 7 or minus 6 or whatever the number is. And then the expected move, if you want to look at it, like you're going to go between one standard deviation and down or up, and this is your spot price right in the middle, right? So we can use tools like this to better understand the implied volatility, what the result might be, where we might end up, and what the expected move is for a couple of days out from now, right? So for Thursday, for some reason, there's a lot more implied volatility and expected move for $102. Whether we got some news or not, I have no idea, but that's what the market makers are dealing and positioning themselves with. Price action map, you'll see this kind of get updated throughout the day. I don't know if SPY has a better example. It probably does. And so you'll see like this is where you're going to bounce. This is where the dealers are positioned. This is where you're going to get rejection. We actually got rejection at 660. If I go to the SPY chart, it was pretty obvious we're going to get a rejection there because of the dealer positioning. We got that and came back down, grabbed liquidity here, and then kind of consolidated in that zone. And then we also have this heat map that I built out. I spent a lot of time on this, so I'm going to spend a bit of time on how I read this. Anything above here, because the middle point is effectively your spot price. Above this is you're going to be resistance line. So this is where you're going to be looking at rejection. This is where it's another layer of rejection, and this is support on the bottom of that. And so this kind of changes intraday as data is coming in. And I think SPX probably has a bit more data. And this is like how I can track where we're going to reject and where we're going to come back down into support. And then from there, we can look at different zones for the week or for the month or for the current trading day, and look at those as zones for where we're going to reject or from where we might be supported. One thing I really like myself is this tool that the Easy built out, and this is where we get pinned or we might not get pinned, depending on how big these strikes are and the exposure around that. You can also look at the key levels here, what the current price is, what the maximum gamma exposure strike is, where your call and put walls are, and then the intraday timeline. So this will get updated intraday. It only really works effectively during the market hours. It's hard to see this getting updated throughout the day, or sorry, after market or pre-market. And then you get the expiration breakdown where you can actually go and see, where market makers are exposed and by how much volume. So for tomorrow, your pin at 653, your call wall 655, 653 right now 77 million bucks, 655 at 71. So leaning more downside than upside right now. And you can see that here you have relatively almost like same amount of call and put volume, but we'll see where that ends up. And if I look at the SPX one, let me just go back down and show you guys the different expiries for tomorrow. 6525, sorry, that's from today. For tomorrow, 6650, 6550, 6495, etc. So more leaning towards puts here, but there's not a lot of volume. Maybe there's some surprise news that comes out and then the volume comes in, but there's not a lot of volume tomorrow compared to like Friday or what we got today and maybe even like on Tuesday next week. So it is what it is, but I've been using these strikes as a way to at least figure out where I want to be positioned myself. And if I see something pick up intraday, for example, I saw the 6580 strike pick up in volume today, about like 300 million bucks or whatever. I ended up taking those before that reversal happened. So profitable either way, but that's how I use it. And then this is how you can see where like there's a lot of different volume for different days for the next couple of months, couple of weeks. And we're going to fall off from in terms of the volume. For some reason, May 15th has a crazy amount of volume, $5.1 billion. And then December 18th here is a lot of volume as well. So, these might be mid-market or mid-cycle plays that they're positioning themselves for. Maybe there's something going on May 15th, or maybe it's the quarterly OPEX or whatever the deal is. There's a lot of volume for that particular day. So it might be worth keeping an eye on those days. I think this is like 6 months into the year. This is like at the end of the year. So it makes sense to have a lot of volume on those. But it's good to see like how we're going to be projecting for the next couple of weeks, couple of months, whatever it is. I don't use this a lot because I'm not looking at like swinging. But if we were in a swinging environment, we could take reasonable bets of like, hey, there's a lot of gamma exposure or call volume for this particular day. You might be looking at getting out of the calls if you're swinging calls on that day in particular. So this is how I've been using it. And we also have gamma exposure for tickers, like we have NVIDIA, Tesla, Apple, Microsoft, others. And again, this data comes in during the hours, during market hours. So Amazon, bearish bias, short the pops. Let's go look at the chart. I'm going to pull up the Amazon chart. Amazon right here. And what is he saying? Short the, he's basically saying buy puts and towards a 210 target, right? So he's probably right. If I look at the chart here and I see like this head and shoulder pattern form, like, yeah, it's probably going to be right. And your call wall is at 210. Yeah, that probably works out. And then this is the different expiries. Again, same thing for all the other tickers. There are different expiries for tomorrow, for the day after, etc. And intraday, you get the signals updating in as close to real time as we can get it. So yesterday it was updating literally like every 2 minutes. Today it took a couple hours just because the market just consolidated and moved quite slowly. But it is what it is. So $6.4 billion exposure today, $22.3 billion of exposure today. We'll see what we get tomorrow, but this is a quick overview of the GAM exposure tool that I built out for everyone. And slowly what I'm doing is adding this kind of logic and how to use this kind of logic into George, so he'll get better and better on SPX in particular. But it is a good tool for us to use and layer in confidence and confluence for our own trades. Hopefully that helps. And if I can help with anything in the meantime, let me know. But otherwise, hopefully this is a good overview. Thanks.